Hello, everyone, and welcome to this webinar. I'm very excited because today we're going to be talking about very important things that everybody is asking a lot of questions about. So, we get a lot of our investors always having the same questions repeatedly. So, we decided to have this opportunity to make a webinar and answer a lot of the questions for everybody. And I'm here with the specialist, the one and only Brittany Franco. Brittany, how are you tonight?
Good. Thank you so much for having me. How's everything? How are you doing?
I'm doing amazing, amazing. And I'm also very excited because, we specialize in investors, a lot of them international, some of them are local, right? And we always get the same questions repeatedly, because we see a lot of people, especially nowadays, that we see some of the interest rates have been starting to come down, right? So people, ask questions. Some people say, hey, they might drop down lower than that, so it's probably better for me to wait. So we're gonna tackle some of those questions that people ask, some of those issues, and we're also gonna talk about a little bit of how to use leverage smartly. How you can use leverage to basically build opportunities for you, right? And that's the reason why we're here tonight. So, Brittany, tell us a little bit about like what are some of the most common questions that you get, yeah, since you work with a lot of people looking to buy homes, properties for investments, etc. Tell us a little bit about that.
I guess the most common one is honestly, should I wait? Should I wait for the market to go down? Should I wait for interest rates to go down? And personally, I always tell them every single time, no. If you have all the criteria to qualify for a property, then take advantage of the market now. Just because we are in a buyer's market. We are in a market where sellers are willing to give buyers contributions, concessions, just because they're desperate to sell their home. Not a lot of people are out on the market, so you don't have a lot of competition. Also, if interest rates do go down, when they were down 2, 3 years ago, the market was just crazy.
It's like it's
Everybody,
like the saying that goes, marry the property, date the interest rate.
yes, marry the property, date the interest rate. The interest rate can change. The property won't. If you fall in love with the
Exactly.
property, like that's your one and only chance to get that property. The interest rate can change. You can refinance. There's programs for you to lower your interest rate for the first 2 years. There's the temporary buy downs, where with a seller concession, it doesn't even have to come out of your pocket. There's
Okay.
so many
Um,
programs.
So some of the people that are starting this process, they're not familiar with certain terms. Like when we talk about seller concessions, what do we mean by that?
Seller concessions is when the seller is willing to give out of his pocket to lower either the buyer's closing costs or just to give money to pay towards interest rate to lower the interest rate. It's when the seller is willing to give out of his pocket to help the buyer, which in a market 2 years ago, 3 years ago, when the interest rates were low, we were seeing the complete opposite. Buyers were giving over 40, 50, 60. I would see offers with $80,000 over appraised value.
Wow, wow, that's crazy. So basically, seller's concession has that become like something that has gone common in earlier times?
Right now, it is. Right now, it's something that most of my clients are closing with seller concessions. And I actually had a file not that long ago. When Hometown Heroes was in town, the client was receiving seller concession, the program for Hometown Heroes, and he bought his property. The bank giving him back $1,000. He did not have to put money out of his pocket, which was the craziest thing to me because everyone's like, no, I'm gonna wait, but take advantage of the opportunity that we have now.
Right. Yeah, but we always continue hearing that we should wait, but like I always like to ask my clients, like do you think there's more people just like you, perhaps waiting for interest rates to drop? And the usual answer is yes, and I like to ask them, what do you think is going to happen when they drop? Are buyers going to go buy or not? What's more common? Are they going to buy or not? Usually the answer is yes, they're gonna buy. And if they go out buying, what's gonna happen with the demand? Is the demand going to increase or is gonna decrease? Obviously, we know it's going to increase. What happens with prices when demand increases and offer decreases, so like basically you're gonna end up paying a premium price for a property that you could have otherwise gotten at a more favorable price now, and eventually you could have refinanced.
Finance. Correct.
Exactly. So usually, are there any specific products out there for people who are looking to refinance? What's the most common strategy, for people who, maybe they want to buy the property now, but when the interest rate drop, they want to maybe take advantage of that?
Yes. So I actually want to head this question, tackle this question two ways. The first way is you can always refinance. The requirement is after you purchase, you have to wait 6 months. After 6 months, if the interest rates go down, you can refinance and you don't have to give a dollar out of your pocket. All right. Now, for those that want to purchase a property and let's just say they don't have the funds right now to purchase a property and they're thinking of doing a refinance, but they're hesitant about it because their primary mortgage has a 3-4% interest rate and they don't want it to increase. What is very popular right now are HELOCs, which is home equity lines of credit. These are lines of credit that, based off of the equity of your property, you can take out money without touching your first mortgage. So
Oh,
something that
wow.
everybody's using, and the bank actually allows you to take money from your property to purchase another property. So they're not going to make a big deal about where is this money coming from. Like, no, they're well aware of this.
Oh, awesome. And usually for people who are trying to get those HELOCs, what are the common requisites that people need?
It's the same as purchasing a property. 2 years of employment, a minimum FICO score of 640, and obviously a mortgage, a property.
Right. And what happens with those people that maybe they don't have a good credit score, or maybe, they're falling short on their finances? Maybe they don't meet they don't meet the income criteria. Like, can they use like a guarantor, or can they find other ways of acquiring those HELOCs?
Yes. So the perks of HELOCs is if you are on the mortgage with two people, let's just say it's you and your husband, and you have the low credit score, but you have high income, and your husband has low income and high credit score. What the bank allows you to do is use the credit score of the highest person and the income of the highest person, and they'll use those two to be able to give you that HELOC.
Oh, amazing, amazing. And let's say, what about people who maybe they're falling in love with a property that needs a little bit of work? Because a lot of some of the questions that I get is like, can I put a low down payment, but also like buy a property, maybe put a little bit of like sweat equity on it? Are there any specific products that can help those type of investors?
We have loans that allow you to fix and flip the property. So you purchase the property and the bank will lend you the money to flip the home. I also have for my first time home buyers that, again, they want to save a couple extra dollars to fix anything in the property. I have conventional loans that go down up to 1% down payment, 3%
Oh,
down
wow.
payment, which you don't see anywhere.
Yeah, no, that's amazing. That's amazing. And that's actually one of the main questions, because one of the misconceptions is that you need to have at least 30% to invest in a property, So it's one of the things that keep a lot of the people away. And so how would you explain it to them that, like, there's opportunities out there for you, like there's ways on how you can acquire a property, even if you don't have as much as a 30% for a down payment, or 20% or whatever. And then I guess that really answered that question, and that's very helpful.
Of course.
So with that being said, are those private loans, or are those type of loans more like like government loans? How do they work specifically?
No, these type of loans are normal, your traditional Fannie Mae, Freddie Mac loans. The the pro of working with mortgage brokers, just like which is what I am, is that we have the option to give you all these types of programs without you having to come in with 30, 40, 50, 60% down payment, just like a hard money loan requires you to. I work with over 50 banks, meaning I can gather all those banks and have them compete against each other to give me the best option for my buyer.
Okay. Oh wow, that's amazing. So basically, what you're saying is that you do not offer just one product. You have options.
Correct. Correct. Many
Amazing.
programs. Yes, not just for first-time home buyers, but also for investors, for foreign nationals. There's so many programs out there that not everyone is aware of that I'm able to use all these programs and provide to my clients.
Okay, so large amount of my investors right now, they come from other cities in South America. They're looking for better opportunities out there, and a lot of the times, they are very wary because they don't know how the process works. Usually, a lot of people have this bad conception. Like in South America, lo- uh, mortgages have like bad reputation, so a lot of times people prefer to buy their properties cash, or wait until they have saved up enough to buy their property cash, because banks have a bad reputation in South America. What would you tell those people that are foreign nationals, that would like to invest in the United States, but they think, hey, like I don't live in the United States, like I don't think I have any product available for me, or at the same time they don't know exactly how the process works, and maybe they prefer to buy it cash, even though sometimes they might find better returns using leverage. What would you tell those type of people?
What I would tell a couple people is honestly, renter, at least here in Miami where I am, rents are never going to go down. The rent is always going to continue going up. Actually, in the last year, I think over 460,000 people moved to down here to South Florida, meaning that's just going to keep increasing the rents, keep increasing. Like, that's not, the purchase prices aren't going to go down. The interest rates, at least for a while right now, are not going to go down because everyone's taking advantage that there's so much movement and there's so many people coming. So I would say take advantage of this. Take advantage that you're living in another country. And if you have the funds to purchase a property cash, don't just buy one property, buy two investment properties. Rent both of those
Exactly.
properties out. Get a rental income from those properties. Have passive income. You can't just think of buying one property. Yeah, it's going to be paid. No, either way, at the end of the day, the tenants you're going to have in the property, they're going to pay off your mortgage and they're going to put a couple extra dollars in your pocket.
Right, right. Okay, that's amazing. And well, as we continue with this very interesting subject, because we touch a little bit about leverage and how instead of just buying one property, you can have two houses. And we're talking a little bit about different products that are in the market out there, not only for, locals, but as we just mentioned, for foreign nationals. So I just want to invite everybody to just stay until the end, because we have some incentives for you, and we have a really big surprise that I'm very excited to share with you. And that's only going to apply. It's going to be very limited, because it only unfortunately it will only apply to the first 5 people who reach out to one of us, to either Brittany or to me, Sebastian Bolivar, directly. But with that being said, stay until the end, because we have really great surprise for you. So going back to talking about leverage, um, you know, for a foreign national, what's the most that they can, finance as far as like the property value?
The
Can they
most that
also can they also get loans that, that require them to only put 1%, 2%, like the one you mentioned for, local investors?
So for foreign national loans, the requirement is different. The down payment is 30% down. So it's 30% of the property value for a foreign
Okay.
national that doesn't live in the United States that is buying an investment property.
Okay. And so that means that they're gonna be able to finance up to 70% of the value of the property, correct?
Correct.
No, there's a question with that. What does the bank use to determine if they get the financing or not? Do they base it off of the income of the person, or how much the property is gonna produce?
So this is my favorite part of this type of loan. They do not base off, they don't get any income from the client. The only thing they need to see is that the funds are here in the US 30 days prior to closing and that you have a primary home over there in your country. Those are the
Okay.
only two requirements needed to purchase a foreign national loan here in Florida.
Okay. And do you need a visa?
Yes, you do need a visa.
Okay, so that's one of the requisites. You said that you need to prove your residence in your country, not in the United States, correct?
Not in the United States. You just need to have a visa, and they're gonna ask for like the passport of where your country, where you're from.
Right. Are there any other requisites that they need? Any documentation that is required for them to actually have the loan granted?
Requirement? No, I would say that is the most that they're gonna ask for. Just the money to be here 30 days prior to closing. Obviously, no credit score because they don't have credit here. One thing they do ask for is for reserves. Reserves, what is reserves? Reserves is an amount of money that you're going to have in a bank account. They're not going to touch this money. It's just so that they can see that you have some assets saved up just in case if the mortgage doesn't pay itself. Let's say there's 2 months that the your tenant left and you're trying to look for a new tenant. Those 2 months, the bank wants to make sure that you have money to cover those 2 months of no tenant paying your rent.
Okay, perfect. So the bank just wants to do the due diligence. I guess another one of the questions that people usually ask is like, should I invest using an LLC or should I put it under my personal name? How would that apply for a foreign national?
So
What's the best
everyone
way to
knows,
go about it?
yes, this is actually a great question because everyone gets mistaken by this, and you can put the property under an LLC, but at the end of the day, the loan is going through the actual person, the actual owner of the company. So they're going to use they can use the assets of the company. They can use, but they're going to use the visa of the owner of the company. All the personal documentation is going to be of the owner of the company. And honestly, buying it under a company and putting the property under a company name, I would say wouldn't I think it's a great idea.
Right, because we understand it has other benefits than just the financial aspect of it. Also for protection, some people prefer because they want to be protected, or sometimes they just don't want to put it under their own names, for tax reasons. So I guess there's multiple benefits, and it not only applies for foreign nationals. As investors, are there any type of loans that you handle for someone who maybe wants to do a flip, which is one of the strategies? And for those who are not familiar with the term flip, this refers to a property that you purchase, maybe it needs a little bit of rehab. You put some money into turning the property around, and then you sell it for a profit, or otherwise you can just rent it out and get a return from it. And there's multiple strategies that investors use that are actually make them very successful, and they're able to replicate. But for those type of investors, are there any specific loans, and which one is like the most common that people use, and
So
which one do you recommend?
the most common is just your average fix and flip loan. The way this works is the bank is going to lend you the amount of the purchase price. They're going to lend you that loan, and then they're also going to lend you what it is that you need to fix off of that property. So you're going to get either a general contractor, or you're going to get your contractors, your third parties that do all the fixes for you, and you're going to give that to the bank, and you're going to show them your budget. Hey, this is my budget. This is what it's going to cost for me to fix everything that this house needs fixing. And the bank is going to lend you that amount plus the budget that you need to fix the property.
Okay. And usually, does the bank just give the investor the money, the whole amount of how much the property is gonna be, plus the cost of the renovation of the property, or how does the bank handle that? Does the bank do that as reimbursement, like the investor puts the money and then they get reimbursed by the bank, or
Yeah,
how does it usually work?
that's how it works. So they get lent the loan amount, which is for the actual property based off of the purchase price, and then they hire their contractors, they pay the contractors, and the bank reimburses them back that money.
Okay. Oh,
Because
amazing.
how it happens is after they do that fix, the bank sends an inspector, and they inspect all the materials they use, everything that they actually did fix, and that will be based off of what they're gonna reimburse you.
Okay, perfect, perfect. I guess those are some of like the major questions that people ask because they have a lot of doubts, and then usually it keeps them from investing. But at the end of the day, like you wanna, there's a saying that goes, don't wait to buy real estate, buy real estate and wait. Right.
Of course.
And what's your perspective on that? What do you think um is the best way for you to just like grow a large real estate portfolio?
Personally, and I've seen it in all my clients, I have clientele, and most of my clientele is past clients. All my past clients buy second, third, fourth, fifth homes with me because I have I'm not just here to give you a loan. I'm here to financially help you in your future to grow and make more money. So how my clients usually do their plan their future out is they start off with something small, either an apartment or a townhome, and every year they start upgrading. They start upgrading. Why? Because every year that you live your primary residence, you after a whole 12 months, you can purchase another primary residence, only coming with 5% down payment, leave the first property you have rented, and now move into this new property as long as you're upgrading or downgrading. So all my clients, just as the years go by, they either upgrade or downgrade and leave their other previous properties rented. So I've had clients that I'm actually closing a deal in I want to say 2 weeks. This is a client that I've been working with for years. She is purchasing her fourth property. She is doing this fourth property as a primary and renting her other three. And she is making a whole bunch of passive income just by renting out those properties.
Oh, amazing. And how did she buy, do you know how she bought her first investment? Did she start with one of those like low down payment loans, or how did she do it?
So how she did it is every year she would buy a primary residence. She bought her first home, lived it for 12 months, upgraded. Of course, she financially prepared herself. She was like, okay, I'm going to save up money because whenever you wait 12 months, a second property you purchase as a primary home, you can purchase it with 5% down payment. She purchased a second home. That first home she left rented. After that second year, another year of her living primary, she purchased another primary home, 5% down payment. Right now, she's purchasing her third home as a primary residence, and she has two that she's renting out.
Right.
So
How
little
long
by little, she was doing it.
how long would it have taken her if she had decided to just save until she had enough to buy the property cash instead of using the strategy that you just mentioned to us? Like,
Years.
how long do you think would she still have four properties today,
No, at all. At all. She'd probably be buying for her first property now.
or probably still saving for that first
Or
property?
probably still saving for more money, of course.
Uh-huh, exactly. So yeah, there you go. And I like to put this into perspective because that's like the mentality of a lot of foreign nationals, because they don't trust banks. They think that having your property mortgage is bad. It's better to own everything free and clear. But that's when the power of leverage comes into play. Now we are talking about a lady who owns four properties. And she's done it in a matter of how many years? Did you say?
She's done it in a matter of five years.
In a matter of 5 years. There you go. And now in 5 years, now she was able to amass four properties. And
Four
I'm pretty sure the net worth. I mean, statistically, the net worth of the average American that owns a home is a lot higher than the net worth of the person that doesn't own real estate, right? But then we're talking about four properties. Her net worth is probably a lot of people are even making more money out of their investment properties than they're making out of their current job. So
correct.
that's that's a great
Correct.
thing to explore, and to basically you're just leaving money on the table if you decide not to use leverage to your advantage and play with it.
Exactly. And not just that, I have so many investment like clients that they have their own, they don't have to wait 5 years. If you have the funds now, you can purchase two investment properties at the same time. The bank isn't gonna not let you purchase two properties because no. The bank allows you to purchase two investment properties at the same time. I closed a file for my client. She was purchasing a primary home. As soon as she closed it, she went under contract for two investment properties and closed both of them around the same time.
There you have it. And that's how you use leverage.
That's how you use leverage.
Okay, let's talk a little bit about, because some investors, sometimes they prefer to, start off with condominiums, or buy, like,
Okay.
they want to start with something smaller. Usually condominiums, are there more restriction when it comes to, like, using leverage? Like, is it why, like, are there, like, first time buyer products for condos as well? That's, I guess that's where my question goes.
For first time home buyers.
Yes, correct.
So for first time home buyers, it is going to be a little bit more difficult to purchase a condo just because of the association. The association is always what is going to give us a hard time. It all depends if the association gets all the documents quick, is helpful, or if you have an association that drags your feet and doesn't really help you get the documents that you need to close. Everyone that's a first time home buyer obviously wants to give less than 5% down payment, and it's completely understandable. But for those type of purchases of condos, there's a specific requirement that the condo needs to have, and it's that the reserve need to be 10% or more of the expenses. And right now, no condo, or maybe 20 out of 100, condos have that reserve. So not as many condos have the reserves needed to come in with 5% down payment. And if they don't have the reserves needed, then you would need to come in with 25% down payment. So it is a little bit harder. It's not impossible, but it is a little bit harder.
Right. What are the benefits of owning, like, a house as opposed to a condo?
The number one thing is the association. You don't have association once you have a single family home, then a condo. A condo, they have the special census maybe. They have, of course, the association payment that you pay monthly, and that's an extra payment that you have towards your mortgage. A single family home, you can do whatever you want to the property, and it's your house. You don't have to be called out by someone and just say, hey, listen, you painted the house purple. I need you to change it back to, what the other houses look like.
So, do we mean that, with the investor not having to pay for association, would that increase the return that he gets from the property?
Yes, it honestly would.
Okay, amazing. And now, if we're talking about this first, we have a little bit more inconvenience if it comes down to a condo. But what about buyers that want to buy a two family, three family, four family? Can we use a first time buyer type of loan for those type of properties as well?
Yes, we can. And actually, last year, November, Fannie Mae came out with a new requirement, whereas for prior to this new requirement, for duplexes, triplexes, fourplexes, you had to come in with 15-20% down payment to purchase one of these. And if you're a first-time home buyer now, you can purchase a 2-unit, 3-unit, 4-unit property with just 5% down payment. So, and I feel like no one's talking about this, and everyone should be talking about this because you're buying a property that's $400,000, $500,000. It has 2 units, whereas so you're gonna live one, you're gonna rent out the other one, and you're only coming in with 5% down payment. You're not coming up with as much money, and out of that property, you're gonna get passive income. You're gonna get rental income for the other unit that you're gonna be renting out.
Okay, that's amazing. And I guess another thing that I want to put into perspective for everybody who's watching our webinar right now is the importance of having a team of experts by
Yes.
your side, because a lot of times, and I think that's the number one mistake, and I can talk on experience that we want to do it on our own, right? But if you are working with, because you mentioned the case of this lady, that is your client, that she's been working with you for years, right? That's what building relationship does. I feel like when it comes to real estate, it's also very important to, put into the equation the fact that if you build a good relationship and a good reputation with the experts you're working with, they're gonna continue bringing you good deals, good properties. Like, at the end of the day, there's a saying, I believe is one that I read from one of Bigger Pockets books, that basically states that rock stars know rock stars, right? So if you have a good mortgage broker, that good mortgage broker is going to recommend you to a really good inspector if you need to, or if you're working with a trusted real estate advisor, that real estate advisor is also going to take you by your hand throughout the process and then connect you with the different, basically helmets that you need throughout a transaction. So that's a great benefit, and it's very important, and I want to stress this, I can't stress this enough, that you need, as an investor, you need to build a team. You need a team, because we cannot just do it on ourselves. And if you build a team, that team is going to continue bringing you successful deals, and you're going to be able to pull them off as well.
Correct. Yes, having that relationship with all the third parties that work together to close your loan is super important, just because they will push your file. You give me a call and I'll answer quick and I'll be like, hey, listen, what's going on? What do you need? All right, I got it for you. Same way back. Same way with the title company. Same way with an inspector. The more relationships you create, the better the transaction is going to flow. The smoother it's going to flow. The faster you're going to close. Also with
Right.
clients, having that relationship with your clients is the best. And I tell all the loan officers that are under me, I'm like, listen, you need to have that relationship with the client, even though the client doesn't qualify and isn't going to purchase with you now. Either they're gonna recommend you to somebody, or they're going to, in a future, whenever they are ready, they're gonna come back to you because you gave him that trust, you gave him that relationship feel that's like, hey, listen, you don't qualify now. Let me get you ready. It's not just all right, buy and leave. Like, you don't qualify, get
Yeah,
out. It's like, all right,
exactly.
let's structure you. I've had clients that have come back to me after 2 years and I've given them a paper with everything that they've had to do, and they come back crumbled with the paper crumbled up, and they're like, hey, listen, I did what you told me to do. I'm ready to buy now. And it's
There you go.
it's the best thing ever.
Right. Also, it's common, and it's also understandable for people to wanna do their due diligence, and maybe, maybe interview a couple, maybe um, uh, a couple of experts in the same area to see which one they decide to take. Which one would you say are the top three questions that a person should ask a mortgage broker before they start working with one?
Definitely the first one would honestly be, it's actually a great question. Um, so the first one would be, personally, if I was a buyer and I would be going to mortgage brokers, I need to know that I'm making my money back. I need to know that financially I'm going to get into the best position. So I think my best question would be like, all right, what are you offering me? What's the interest rate you're offering me? What's the cash flow close you're offering me? What's the monthly payment you're offering? What are the programs you're offering me? What programs are you going to offer me? And just let the loan officer work. Why? Because I want to see if the loan officer is going to give me what they want, their program, or they're going to let me decide for myself that I'm going to be paying the mortgage for the next 30 years, decide what type of financial program or what type of financial problem I'm going to be getting myself into. I want to decide that for myself. I don't want you to decide that for me. So that's definitely a big one. I think another question would be just, if I don't qualify, what is it that I have to do? And see, based off of the treatment that they give me, that's who I'll go with. Service is the number one key. And I actually love it when clients tell me, they come sit with me and they're like, oh, but I want to shop around. I just want to go look at someone else. And I'm like, all right, go, because I know they're gonna come back. I give them the time that they need, and I give them the service. Whenever I'm with a client, I'm locked in, and I take minimum an hour and a half, 2 hours with the client, because I explain to them the process from A through Z and Z to A.
Right. I guess another one might be, like, do you work with investors, or do you know different investment strategies? Because I can remember many times when, like, uh I want to people want to bring in their own lenders just because they offer them a better interest rate, but a lot of time these lenders are not able to close on the loans, right? So when a transaction falls through, it's very frustrating, not only for the client, but for everybody involved in the transaction, right? Because the client at the end of the day ended up just, if you're a seller, then you had your property under contract, you spend a month, 2 months for the transaction, hoping that your property would that your house would sell soon, and then it's wasted marketing, wasted time on everybody's, and for the buyer as well. It's just stressful because you go back to zero, and you have to start searching for properties again and all those things. So it's always important to make sure you're working with trusted professionals that are actually going to be familiar with different strategies and are going to be able to close on the loan, right?
Right.
So with that being said, guys, let's answer some of the questions that we have on the chat. So Andres Grisales, he's asking, do they work with people with ITIN?
Yes. So we do have ITIN loans. The down payment is a little bit higher just because of the specific category you're in. So they require you, sorry, to come in with 15% down payment. But the requirements are the same. 2 years of employment. Depends if you have a credit score or not. Most of my ITIN clients do. Some of my ITIN clients don't. So it all depends on your scenario. But do we have the loan? Yes, we do.
Okay, let's see if anybody else has another question. We're answering everybody's questions. I guess Andres' question was the only one. But anyway, so as we promised, we have great incentives. So for everybody who stayed until the end, we gotta tell you, I have an amazing project. It's new construction. And for only the first 5 people that get in touch with me, I'm offering 6 months HOA included. So we spoke a little bit about how HOA can be a bit of a headache. So we're solving that issue for you guys. So if you reach out, the first 5 people to reach out to me who end up making the transaction, making an offer, they're gonna have the opportunity to have those 6 first months of HOA included with me personally. That's one of the incentives that I'm offering you guys tonight. So take advantage of that. And I don't know, Brittany, do any of our guests have any incentives that you can offer them for staying till the end? What's the surprise with you?
Yes. So for me, they're gonna get their appraisal costs completely waived. They're not gonna pay for the appraisal, and I'm giving up to $1,000 towards cash to close.
There you go. Amazing. So you guys don't miss out. Take advantage of this opportunity. If anybody's interested, please leave us your information in the chat. We'll reach out. Anyone from our team will reach out to you, and we'll be happy to listen to your goals and design a personalized plan of action for you. Okay. So thank you everybody for staying until the end, and stay tuned and see you on the next webinar. Sebastian Bolivar here. It was great having you tonight.